Busy realtors make great money and still overpay in taxes. A full schedule does not automatically mean your tax situation is being handled well. You can be closing deals, showing houses, answering calls, posting listings, managing clients, and still leave money on the table when tax season comes around. A lot of realtors assume overpaying only happens when someone makes a big mistake. In reality, it usually happens through smaller issues that build over time. One missing system here, one missed deduction there, one rushed decision at filing time. By the end of the year, all of it adds up. So in this video, I want to walk you through why a busy realtor can still end up overpaying in taxes and what to pay attention to before it costs you more. First, a busy schedule can make it harder to track expenses well. Realtors spend money in a lot of different places, and when businesses are moving fast, a lot of expenses don't get tracked in a clean way. Some are on a card, some are on another card, some are in email receipts, some are in bank accounts, some are easy to forget completely. Then tax time shows up, and now you're trying to look backwards instead of staying organized as you go. An expense cannot help you if you cannot find it, document it, or explain it clearly. Second, mileage gets missed more than people realize. For many realtors, driving is one of the biggest business expenses of the year. You are going to showings, inspections, closings, listings, appointments, client meetings, broker events, and more. The problem is mileage often gets treated like something you remember later. Later usually doesn't work very well. By the time you try to rebuild it, details are fuzzy. Dates are harder to pin down. Trips blend together, and some of that deduction never makes it onto the return. When you are busy, it is easy to think, I drove a lot for work, so I'm probably fine. But mileage needs records. A general memory of being on the road is not enough. Third, businesses and personal expenses can start running together. This is a big one. A realtor may use the same card for gas, groceries, staging, items, lunch, often supplies, office supplies, coffee, and client-related cost. Once everything starts blending together, tax prep gets more difficult. What could have been a simple review turns into extra work and missed details. It also becomes harder to see what your business is actually spending. That matters for taxes, but it also matters for decision making. Clean numbers help you understand where your money is going. Mixed numbers make everything less clear. Fourth, some realtors rely too heavily on the bank statements. Your bank account shows money moving in and out. It does not automatically tell the full story. A bank statement does not organize your expenses for you. It does not separate personal from business. It does not tell you whether something was documented well enough, and it's not helpful when that description of a charge is vague or incomplete. Looking at bank statements alone can make you feel more organized than they really are. You may have activity, you may have records, but you still may not have a clear system. Fifth, some deductions get overlooked simply because no one stopped to review them closely. This is another place where busy business owners lose money. You may know the obvious categories, you may remember a few major expenses, but some of the smaller or less Visible deductions are easier to miss when everything is rushed. For realtors, that includes software, subscriptions, design tools, website costs, marketing materials, association dues, lock boxes, signs, photography, mileage, continuing education, and other day-to-day business expenses. Each one may not seem huge on its own. Together, they can make a real difference. 6, waiting too long creates pressure. Once tax prep gets pushed too far down the list, the whole process gets heavier. Now you're looking for documents under pressure. You're trying to remember what happened months ago. You're making decisions faster than you should. And when the pace picks up, small details are easier to miss. A lot of overpaying does not come from one dramatic mistake. It comes from a rushed process. That's why staying ahead matters. Even a short review before filing can help you catch missing records, spot gaps, and clean up problems before the return is finalized. Income year can create a false sense of security. This is something a lot of people do not talk about enough. You can have a good year and still have systems that aren't good behind the scenes. Good commissions do not automatically mean clean bookkeeping. A strong revenue does not mean every deduction was captured. Being busy does not mean your tax prep is in good shape. Sometimes high earners are the very people who need a close review. Since there is more money moving, more activity to distract, and much more for things to get overlooked. Now, none of this means you have to do everything perfectly. It does mean you need a clearer process, though. I've been helping business owners with their taxes for over 20 years, and I can tell you that there's a lot of tax frustration starts long before the return gets prepared. It starts with what was tracked, what was missed, and how early someone took a serious look at the numbers. So if you're a realtor and tax season feels more confusing than it should, now is a good time to clean it up. In just a free 30-minute tax prep session, we can review your income and expenses, identify deductions you may be missing, clarify changes that can affect your 2025 return, and give you a clear document checklist. We can meet in my Montgomery office, at your business, or virtually on Zoom. Book your time on the calendar now.